Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. We made it to the end of the week. I'm Tall Mike. I'm so glad you're here today. What do we got going on in the stock markets today? Well, kind of a little flat. The Dow, down about 30 points. NASDAQ down a little bit, but pretty flat today. Nothing, no new records yet. Now, we did hit a new record just yesterday in the NASDAQ. The day before, we hit a new record in the S&P. Day before that, I think we hit one in the Dow. New record day after day after day. Now, I had some put options on the SPY. Little small position. Those pretty much expire worthless today. But what am I going to do? Now, normally when the market kicks my butt, takes all my money, I go move on to a different trade. But this trade, for some reason, I still like it. I still think that the market is going to correct. I think it's going to pull back. I did roll out my options. I'm going out another week or two. Anyways, I think that the stock market's still going to come in. Now, why do I think that? Well, what's going on right now is economic activity is in a free fall. But what this is doing is sending the market higher. So you got the economy dropping like a rock, decelerating at a faster pace than it's ever decelerated at, but yet the stock market's going higher. And the reason for this, of course, is because the worse the economy does, we know that the Federal Reserve is going to have to print more money. You see, the GDP is no longer based upon our production. We send people home and we pay them money. We send them checks to stay home, right? That's what we were doing for the last quarter. Well, actually about the last year and a half, 18 months. Keep sending out the unemployment checks, the stimulus checks. Stay at home. Don't go to work. Don't produce anything, but go out there and spend money, which is causing that inflation. So we're paying people to stay at home and watching the economy go down. Well, the government has become responsible for about 50% of the GDP. 50% of the GDP. That is just totally ridiculous, totally unsustainable. But that's what's going on. The government keeps printing money. Now, the reason I think the market's going to come back in, which is because it needs new money. The market is like a heroin addict. The stock market needs a fix, and it wants to fix right now. Now, heroin addicts, they can't wait a week, 2 weeks. They need the money right now. They need the heroin injected right now. But the government's not quite ready to inject it. They're having trouble getting this new spending bill passed. Now, it started off at $3.5 trillion. $3.5 trillion. They knocked it down to about half of that. Now, I think it's down to $1.75 trillion. And they're still having trouble getting it through. Now, don't worry. They got another $1.5 trillion of, I think it's the infrastructure bill coming. So there's 1.75 and 1.5. This will be over $3 trillion when they finally pass these through Congress. And they will get them passed eventually. And here's what's going to happen. Well, the stock market's going to throw this tizzy fit. And then the politicians go, oh, we need to print some more money. Let's pass these bills. Oh, we need to raise the debt ceiling so the Federal Reserve can keep pumping out the money. And the stock market will go to a new record high. But I do think we're going to get that tizzy fit by the market. And I think it's going to come back in. Now, I always watch the VIX. Oh, the VIX is so important. I don't know if you guys are traders, but if you watch the VIX is a volatility index. It measures fear in the marketplace. And when the VIX is low, there's no fear and the markets tend to float higher. And when there's fear in the marketplace, the VIX spikes up and the markets tend to go down. Well, what's happened the last couple days is the stock market's been going up to new record highs. But the VIX wasn't going down. The VIX was actually going up with the market. Now, that's a telltale sign that the day of reckoning is just around the corner. It's going to come in. Now, I'm not saying it's going to crash here. We do have a lot of signs that we're at a top, though. That euphoria in the market is unreal. It really is. I mean, you got those, the GameStop people, the AMC, you got the Dogecoin people, you got the cryptos that are just exploding. Now, I'm not saying the Bitcoin market's going to bust here. I actually think Bitcoin will hit that $100,000 figure. I believe that. And maybe everybody will just get out of the stock market and put all their money in cryptos, and we can push that Bitcoin up to 1 million, maybe 2 million. I'm not sure how it's going to play out, but I do think that will go higher. But these are telltale signs that there's all this euphoria, just euphoria in the stock market. Everybody thinks it's going to go higher. Now, this week we had, Tesla. Tesla passed the $1,000 a share mark. Now, $1,000 a share, put it in the category of $1 trillion company. $1 trillion. There's only 4 other companies that are at $1 trillion valuation. Now, Tesla makes the least amount of money to be $1 trillion company. But this thing, it's kind of like, the euphoria, what's bubbling up. Do you realize that there's people betting that Tesla's going to hit $1,700? It's at about $1,100 right now. They're saying it's going to hit $1,700 by next month, and they're buying options on this. They're throwing like $500 at it. I mean, these are the Robinhood traders. These are the ones that they really got faith in this Tesla company. They think Tesla can add another $500 billion by next month. They believe that. And, in this euphoric market, maybe we get that blow off top. Maybe Tesla does explode that high. I don't think it will. I don't think it will. I think Tesla's overvalued here at $1 trillion. But there are people betting on that, and that just shows you that the euphoria is at a record high. This goes back to the dot-com days. Now, a lot of you millennials, you weren't trading 21 years ago when we had the dot-com boom. Now, how did that end? Well, let's think about it. Well, it didn't end very well. The bubble popped and it lost, I don't know, let's just call it 60, 70% of its value it lost. Okay, so now can this market lose 60 to 70% of its value? I think it can. I think it's going to lose 80 to 90% of its value. But not yet. Look they got those stimulus bills coming. Biden's going to get those through. We're going to get, those. Well, they add up to $3 trillion, and that's heroin for the market. But everything is pointing to a market top right here. Look at the Buffett indicator. What is the Buffett indicator? Well, it's the total market cap of the U.S. stock market compared to GDP, and this is over 200%. Now, the market is cheap when it's down below 100%. We're like at 240%. That's telling you just to get back to the norm, which is 100 is the norm, okay? And just to get back to that, we're going to have to drop about 60%. The PE ratios are very elevated in the S&P right now. Very elevated. Now, one of my favorites, the Dow to the gold ratio. Dow to the gold ratio up over 20 to 1 again, 21 to 1. I think the stock market, compared to gold, I think it's going to drop about 90%. 90%. Now, you can have a crack-up crash. Yeah, the market can go to 100,000, 200,000, 300,000. We can become like Zimbabwe. We can become like, Venezuela. Their stock markets are going up and up and up. And, in Zimbabwe, everybody's a billionaire, but nobody can afford a loaf of bread. It's really crazy what can happen. But I do think that we're going to get a pullback. I think the market's going to come in. There's going to be volatility this next week. Why? Well, because the Fed chairman, he's going to come out and talk on Wednesday. He's going to give the new policies. Now, the new policy, this is a very possibility that they might actually do what's called a taper. Now, right now, the economy is doing so well that we have to print money to buy $80 billion every month of bonds and another $40 billion every month of mortgages. That's how good the economy's doing. We have to keep pumping money in. Now, we don't have this money. No. We do not have the money. I wouldn't be upset if we had the money. We don't have the money. So we print the money, we create the debt, and we send it in there just so that the markets can stay up. We don't want those markets to come down. You know why? Well, the rich people would become poor people. We can't have that in the United States, so we got to keep pumping the money in. But they're coming out the next week on Wednesday, and they're probably going to say, hey, inflation is getting a little out of control. We're going to start tapering a little bit. We're only going to buy maybe, $75 billion instead of $80 billion worth of bonds. And, we'll keep buying those mortgages because we need that house market up. We need it to stay up. So the volatility, if they even mention the word taper, the market tends not to like that. They want this heroin. They want this money pumped into the stock market. If they stop pumping the money in, the market free falls. And when it does, it's going to be the mother of all crashes. But no, it's not here yet. It's not here yet. We're going to get that $3 trillion through. They're going to keep pumping this money in, but the market's going to have a little tizzy fit because it wants some heroin now. It wants to be injected so that it can go higher. The market's going to have a tizzy fit. They're going to pump the money in, and we will see record highs from here. The crash is not going to come until next year. It just isn't. They're going to keep pumping the money in. Now, is this a good thing? Well, it's a good thing if you wouldn't. If you buy stocks now. I'm betting the SPY that the stock market comes in, the puts. Now, it's a small trade for me. There's a thing about trading and then investing. They're two totally separate things. I'm a trader, and with the small part of my portfolio, large part, that's money that's managed a different way. But a small part I go out there and I gamble. And right now I'm gambling the SPY is going to come in. Okay, now when it comes in, I want to buy that dip because we're still in this buy the dip mentality. If we get a 10% pullback, it's time to put the money back in because they will put the money in with you and the market will go higher. If you like this stuff, give me the thumbs up. If you really like it, punch the subscribe button. Get out there. Have a great weekend, everybody. I hope to be talking to you again next week. Bye-bye now. I'm Tall Mike.